Welcome to our exploration of gains from trade. In this video, we'll uncover how countries benefit from trade by specializing in goods with lower opportunity costs. Let's begin by understanding what trade truly means. Trade, at its core, is the exchange of goods and services, playing a crucial role in economic development. Through trade, countries can obtain products they do not produce efficiently, boosting their economies and enriching the lives of their citizens with a greater variety of goods. In the upcoming segments, we'll delve deeper into the economic theories behind trade, including specialization and opportunity cost. You'll learn how specializing in producing certain goods leads to increased efficiency and productivity. We'll also explore real-world examples of how countries gain from international trade. The principles of trade are not just academic concepts. They drive global economic growth and foster better international relations. So, get ready to discover the incredible benefits of trade and how it shapes the world around us. Let's dive into the basics of trade and see how it all begins. Now, let's explore the basics of trade. Trade is the exchange of goods and services between countries, a cornerstone of economic development throughout history. From ancient barter systems to today's sophisticated global markets, trade has evolved, but its essence remains unchanged. There are various types of trade: domestic and international, bilateral and multilateral, each playing a crucial role in a nation's economy. Historically, trade routes like the Silk Road and transatlantic exchanges fueled the growth of civilizations by connecting diverse cultures and economies. Understanding these fundamental concepts shows how trade shapes our world, fosters economic growth, and enhances global relationships. As we continue, you'll see how specialization and trade in economic theory illustrate the gains from trade. Specialization plays a pivotal role in trade and economics. By focusing on specialization, countries can concentrate on producing goods where they hold a comparative advantage. It means allocating resources to produce a limited range of goods more efficiently. For example, a country rich in mineral resources can specialize in mining and processing minerals, producing them at a lower cost and higher quality. Similarly, a nation with ideal conditions for agriculture can focus on farming and exporting produce. These examples highlight how specialization streamlines production. The benefits are significant. Specialization leads to increased efficiency and productivity, enabling countries to produce more with fewer resources. This reduces costs and increases outputs, driving greater economic growth and prosperity. As we proceed, you'll see how understanding opportunity cost further refines trade decisions, helping countries optimize their production choices. Opportunity cost is a foundational concept in economics. It represents the value of the next best alternative foregone when a decision is made. For instance, choosing to study for an exam over hanging out with friends means the opportunity cost is the missed social interaction. In trade, countries face decisions about what goods to produce and what to trade. Understanding opportunity cost helps them make strategic choices that maximize economic benefits. A country rich in natural resources but lacking in technology might forgo producing high-tech gadgets and focus on mining, trading its resources for those gadgets. This leverages its strengths and reduces costs. Understanding opportunity cost guides nations in specializing where they hold comparative advantages, leading to more efficient production and beneficial trade partnerships. As we continue, you'll see how this principle drives global trade dynamics. Join us as we delve deeper into the world of comparative advantage. In economics, comparative advantage is pivotal. It refers to a country's ability to produce a good at a lower opportunity cost than another. This principle underscores the benefits of global trade. Imagine country A can produce wine more efficiently than cheese, while country B excels in cheese production over wine. By specializing in trading, both countries can enjoy more wine and cheese than if they produced both independently. Comparative advantage highlights the efficiency and mutual benefits nations gain through trade. Economist David Ricardo championed this theory, revolutionizing our understanding of international economics. As we continue, you'll see how this principle is applied in real-world scenarios, showcasing the tangible benefits and opportunities trade offers on a global stage. Let's dive into real-world examples where countries have reaped significant benefits from engaging in trade. Consider South Korea, once a modest economy, rapidly transformed through its trade policies. By focusing on electronics and automobiles, its GDP skyrocketed. Next, look at Germany, renowned for its engineering prowess. Specializing in high-quality machinery and vehicles, Germany has consistently maintained a trade surplus, boosting its economy. Then there's Vietnam, which opened its economy to global markets in the late 20th century. By integrating into global supply chains, its growth rate has been one of the fastest in the world. China's economic miracle began with policy reforms in the late 20th century. Becoming the world's manufacturing hub has lifted millions out of poverty. Finally, Mexico greatly benefited from the North American Free Trade Agreement, NAFTA, diversifying its economy and boosting its industrial sector. These case studies visualize the substantial gains derived from trade. Moving forward, you'll see how the challenges of economic isolation can impede such progress. Economic isolation often leads to significant drawbacks. Countries that abstain from trade miss out on the efficiencies and opportunities of global exchanges. Historical examples illustrate this point well. In the 20th century, North Korea chose economic isolation, leading to severe stagnation and inefficiency. In contrast, nations that embraced trade flourished by leveraging specialization and comparative advantage. An economy attempting to produce everything domestically faces higher costs and suboptimal productivity. Historical records, from the collapse of closed economies to the setbacks faced by isolated regions, show the perils of not participating in the global market. These examples underscore that economic isolation hinders growth, innovation, and prosperity. Understanding these pitfalls highlights the importance of trade in driving economic success. As we advance, you'll see how engaging in global trade resolves these challenges and unlocks immense potential for advancement. By engaging in trade, countries can overcome the limitations of economic isolation and unlock new opportunities for growth. Isolation can stifle an economy's potential, leading to inefficiencies and resource shortages. But when countries open up to trade, they gain access to diverse goods and services, fostering innovation and economic dynamism. Previously isolated economies like China and India experienced unprecedented growth, higher living standards, and technological advancements upon embracing global trade. Trade allowed them to tap into global markets, outsource inefficient processes, and attract foreign investment. Positive outcomes of this shift are evident in improved infrastructure, better healthcare, and increased education opportunities. Trade connections have transformed these economies into bustling hubs, creating jobs and reducing poverty. Integration into the global trade system empowers nations to overcome initial economic hurdles. Moving forward, you'll see how these transformations can be sustained and enhanced through continued engagement in trade. As we look to the future, global trade continues to evolve with new technologies and changing economic landscapes. The trends we're seeing suggest a world of interconnected economies, driven by innovation and technological advancements. Technologies like blockchain and AI are reshaping trade, creating new opportunities for efficiency and security. However, with these advancements come challenges. Trade policies, cyber threats, and geopolitical tensions could all impact the future landscape of global trade. Despite these challenges, there are immense opportunities for countries that can adapt and innovate. By embracing changes and focusing on sustainable and inclusive growth, nations can unlock new economic potentials. As we stand on the brink of this evolving landscape, one thing remains clear. Adaptability and forward thinking are key to navigating the future of global trade. Join us in the next segment as we concisely recap the key takeaways from our journey through the world of trade. We've journeyed through the intricate world of trade, unveiling its profound impact on the economic landscape. In conclusion, trade allows countries to specialize, reducing opportunity costs and driving economic prosperity. By focusing on goods with lower opportunity costs, nations achieve unparalleled efficiency and growth. Comparative advantage, specialization, and rejecting economic isolation propel economies forward. From historical trade routes to modern global markets, the importance of trade has never been more evident. Trade is not just an exchange of goods and services. It's a pathway to unlocking potential, fostering innovation, and building stronger economies. Embracing trade principles is crucial to tackling future economic challenges and seizing new opportunities. Thank you for joining us on this enlightening journey. Let's keep exploring, innovating, and advancing together. Until next time, stay curious about the world of economics.